All right, traders, it is 11th of July, 2017. My name is Jameson. Welcome to Behringer Trading. We're looking at a daily vertical bar chart of IWM, the Russell 2000 here. So we've been consolidating for quite a while. I've been pretty bullish as we've maintained the this kind of lateral trading, working off these overbought conditions relative to this bullish ascending channel. We're kind of retesting highs here, and we kind of have a key area of interest here. So there's a point at which it looks like demand is contracting, and then we had this huge surge of volume here, and it kind of created a doji, and now we're kind of rejecting it, right? So if we draw a line through here, we can see an attempt to go higher, up thrust, and then we're breaking down. Now we're still holding this level of support. We're still holding a 50-day simple moving average. So it looks like we're seeing an attempt at bullish absorption. Now we have some supply that came in. So on this session here, it's difficult to see. Prices break down and they close off lows. That's an important session. And then we attempt to rally higher. There's no follow through. A lot of dip buyers should be bullish. No bullish follow through. This is a supply zone. This might be distributed, right? Here's our preliminary supply, buying climax, automatic reactions, secondary tests. Here's an up thrusts, and then now we're just testing this zone where the automatic reactions occurred. So now we actually have another level of supply here, and that supply loses this key session. Now it doesn't result or exceed demand. This is right back into this level of support, so it's not a sign of weakness that's present. But if you look at this cluster of trades here, it's below this key session. So it looks like this previous level of support is now being confirmed as resistance. If we can't get above 140, then this may be a distributive process, right? Preliminary supply, buying climax, automatic reaction, secondary tests, little up thrust after distribution, and then potentially, if we break down, we'd have a sign of weakness. We'd rally back up, last point of supply, and then we break back down. So again, we have this $26 price target that's here. If we break out higher, I would remeasure that. It would be much higher. But what cause has been built right here? So if we look at a point and figure chart and we correlate that to this consolidation range, we're just going to apply it from June to July. In order for me to isolate the June to July consolidation, I've had to change the settings from the period to 60-minute. I'm using a 1-box reversal, 1-box eyes. So every box in this horizontal count here, or every column here, is worth $1 move. There's 10 boxes. So if we actually break down, it would be a $10 price objective, which would be 130. Now look, in this level that's consolidating, we can see that there's a lot of supply that encountered here, but we didn't wash out and break this level, and we're just kind of retesting it, and supply is contracting. So with supply contracting, that means that there's obviously not a lot of sellers. It may be in strong hands. We had demand expanding, but now we're on X, and X is bullish. That's actually a reversal to the upside. At the present time, this session just started today, there's not a lot of buyers. We need to see this up wave actually build some demand and result in a 142 price target. If not, we have a downside price objective of 130. You can see the automated bear trap that's there. I ignore those. So that 130 would put us below the 200 simple moving average, and that would put us right here. Now that's important because this is a huge climactic buying area that's here. So this would become, on a larger time frame, this would become preliminary supply. Here's our buying climax, automatic reaction, secondary tests. This would all be an up thrust after distribution. And then if we were to break down the 130, that's a sign of weakness relative to this trading range that's here, because we lose the automatic reaction, this level of support. We would then probably rally higher, create a last point of support, and then potentially break back down. And if we lost this preliminary supply, we would then remeasure that, and this $26 price target would probably be $35, and then that would put us breaking all the way down to the 110s. I don't think that's going to happen, but that's kind of how the structure works. So right now we have a key area of interest. This might be an attempt at bullish absorption because we haven't broke support. So that would give us a $10 price target putting us up into the 150s immediately. But recognize that this is a key area, this key session here, and at the present time, we're rejecting it. So I would view this as bearish below this level, bullish above this level.